We just got news that Meta may be getting into the cloud business. Now, what does this mean for them? Why are AI stocks actually falling on this news? We have Nvidia down 3.25%, AMD down 5%. We have Micron down 7.5%. So, why is Meta flying up 7%? What's this mean for some of the other AI companies? We'll talk about this. If you don't mind, hit subscribe so you can see future videos just like this. Sorry, feel like I'm sounding a little out of breath. Just came in from a workout and saw the pump, so I'm still, slowing down from that workout. But let's take a look at it. I mean, take a look at this. The whole market's down, right? Like 0.8% on the Nasdaq, and yet Meta is popping. It's up to $610, up 8.2%. This is one of my largest holdings. This is also one that I've talked about as a very cheap company recently. And it's not like it's got this business model that's a boom and bust cycle. This is something that has consistently grown. This company has significantly grown over the last 10 years, consistently moving up and to the right for revenue, EBITDA, net income, even free cash flow, even with their recent massive investments in AI infrastructure. So what did they announce today? What's got everyone so excited? Apparently, Meta is now building a cloud business to sell excess AI compute, according to Bloomberg. They've thrown this out that they may look at that at some point, but coming from Bloomberg adds maybe some more legitimacy to it, or maybe just the timing of it. It's like, yes, they threw it out before that they might do that, and now they actually are doing it. So this is what the market's been waiting for, as Investing says. It justifies the heavy CapEx spend, diversifies a line of business outside of advertising, which some people think is cyclical. I think advertising is actually less cyclical than people think. I've heard it described as selling revenue and profits to businesses. Basically, you pay us, we pay you more, is how it works. So even in recessions, it's not like companies can stop advertising. That's when they need to advertise even more. If Meta can sell compute, they can probably begin selling more B2B agentic services to those same clients using their compute. Okay, so this could be a big business line for Meta, which we'll get back to. But why are some of the other companies like AMD down 5%, Micron down 7.5%, Nvidia down 3.25%? Why are these companies falling down when it's coming out that Meta may sell extra compute? Well, some people are pointing out that this could mean that they're not actually compute constrained. Meta doesn't need more compute. They have too much, so they're willing to sell it other places. So some people are like, well, that's naturally bearish for Nvidia, AMD, Micron. This means that maybe the crazy CapEx spend is, maybe not going to continue at the same rate because Meta already has more than they can deal with. On the other hand, you could say, well, now, if Meta's trying to monetize this other business, they might have to spend even more. Like, there's a great return on cloud infrastructure. And also, this means that they could be needing more. This could actually be really good for, I guess, the brick and mortar companies that are helping build infrastructure, because Meta will have to, continue this CapEx spend, most likely. So you can take it different ways. You can say, well, this means that we're not as compute constrained. You could take it as, hey, there's such great margins. They're going to buy even more than they were going to buy before. They're going to continue the same level because not only do they need it for their business, but they're also seeing potential for other business lines. So it is interesting. I could have seen maybe Microsoft, Amazon, Google maybe dipping a little bit on this news. I understand the Nvidia, Micron, AMD sell-off. I do think it maybe is a bit overblown because this shows that they're going to continue monetizing in different ways. I also understand this from a Meta perspective. This kind of spend, I think, is easier for the market to understand. Like, if they're going to spend and build out AI infrastructure, and have a cloud business, the market already knows how that business goes. Like, we already know the margins, but it was harder, I think, for people to feel comfortable with Meta just saying, yeah, we're buying 6 figures. Sorry, not 6 figures. What is that, 12 figures or whatever, $100 billion plus worth of AI compute. But yet, we're keeping it all in house for ourselves to help with advertising, which we've already seen their business, their revenue start to tick up on this news. Like we're seeing a reacceleration in Meta's revenue. They're expecting it to go up 30% this year. But again, it's a lot of people think of the AI cloud business as a little bit more of a known quantity. So I understand the market's reaction. I also think this could be big for Meta and could, build out another business line, diversify their income. I asked Claude to try to give me an idea for like what this could mean, right? Apparently, like in terms of quantifiable numbers, Zuckerberg floated this back in May during their shareholder meeting. Their capex guidance for 2026 is 125 to 145 billion, up from 72.2 billion in 2025. So they're going to double their capex spend this year. Their capex in Q1 was 20 billion. For context on scale, the capex intensity is roughly running 65% of projected revenue. So yeah, AWS right now is at $142 billion annualized run rate, and it's growing quite quickly. It's going to grow at 30% next quarter. This was built over 18 years of compounding infrastructure investment and enterprise sales motion. Keep in mind, it wouldn't take Meta the same amount of time to build out their cloud business. It's not like, oh, in 18 years, in 2044, we're going to see $142 billion of revenue. Of course, there's no telling what the future holds, but obviously Meta's dumping a lot of money into this. So, like, it's already ready for clients. Of course, there's definitely a learning curve. They have zero enterprise cloud sales infrastructure, no billing provision stack for third-party tenants, no track record selling to IT buyers. So this will take time to grow, but this could be a triple revenue growth rate part of their business, which I think could be exciting for the market. So they explained if Meta monetized just 10% of their $130 billion 2026 infrastructure spend at cloud-like margins, so 30 to 40% operating margin, similar to AWS, that's a notional $13 billion of capacity value. But actual sellable capacity is whatever is left from Meta. So this gives them flexibility too. Let's say they like, hey, we have extra capacity. We wanted to use let's say they have $200 billion worth of chips or something. Okay, we're using 90% of it, but we'll sell you this other part. And obviously, like, they're going to sell at a high margin if they're just doing a small amount. So they'll be able to take advantage of that as well, like just less waste, I think. So the important read, Meta is signaling to investors our capex spend isn't just a sunk cost. There's an off-ramp, more than its real near-term revenue driver. The stock's 6% relief rally shows that there's some relief. Let me know your thoughts on this underneath the video. I still think Meta's quite cheap, even after a 6% pump. That's 17.5 forward PE ratio, and that's based on analyst expectations, which they often beat. So this could be seen at a 16 forward multiple. Of course, I would like to hear something more from the company rather than just Bloomberg. But I want to hear your thoughts on this underneath the video. I think Meta is one of those companies that you can buy, and you can buy it for a couple of years. Maybe it doesn't do anything, and then all of a sudden it will pop. This is probably my third largest individual stock holding behind Amazon and Google. Trying to build up Microsoft because I think Microsoft's extremely cheap as well right now and discounted by the market. It's a little bit more expensive on a PE basis than Meta, but it's more discounted compared to where it typically trades. And then I hold QQQM and VOO, which are just indices as well. But this is definitely my number 3 holding, and I'm kind of happy to see that they're doing this, even if they don't monetize it to the same level as AWS or Azure or Google Cloud. I think their goal is not to build it as large as these other companies. I think it's more to monetize extra compute that they don't necessarily need at certain times. So I think it will be a very profitable addition to their business. Thank you so much for watching. I appreciate it. I'll see you all soon. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence.